One simple concept is gonna make your learner session trading so easy, so simple. So what is that concept? I will talk about that concept in this video. So welcome back guys to another episode of T2 SMC Trader. If you didn't give me the thumbs up, just pause the video, give me the thumbs up before watching this video and subscribe to my channel if you are new. If you don't support me, how can I continue this journey without your support? So please support this video by giving the thumbs up and subscribing to this channel. I'm uploading so much informational video every single day so that you can improve your trading journey with all of those information. So please support my channel, be the member of our family. Now, what is the learning session? As I told, I am gonna simplify the concept over here. The learning session concept should be one thing, and that is 95% of the time market is going to make liquidity around the learning session. If you can think or believe this concept in your mind, if it is strongly situated inside your mind, this learning session is gonna be too much easier to trade. Okay. Now, if you think that market is good, you don't know, okay, where market is going or what is it going to do around the London session. So first you have to do is you have to mark before the London session, you have to mark the swing low and the swing high, which is obvious. So I'm going to mark this swing low before London session. So this is the London session and this is the swing high. Okay. So over here in this area, if you see that market has made sell side liquidity around London session, then you will start to look for buy. If you see market has made buy side liquidity around the London session, you will start to look for sell. Very simple concept. Now, when you see that this low has taken by that low around 115, which is pre-London session, so around London session. Okay, it doesn't need to happen inside 2 a.m. to 5 a.m. kill zone. It doesn't need to happen that inside that time frame. It can happen around the London session. That means from 1 to 6. That should be your whole London session, not the kill zone. Okay, but yeah, you will start to look for your entry around the kill zone. That's obvious. If you take a closer look, this low has taken by that low, but it's a shallow run. What did I tell you about the shallow run? If you see the shallow run, you will mark that shallow run as your obvious liquidity. That obvious liquidity will be taken later when market has done its upside work. Then this is going to be your obvious liquidity. So you can see around London session market has made the sell side liquidity. What should you look for now? You should look for buy. Now I would love to remove this one. Instead of that, I would love to mark this low over there, this low, so that you can understand that why it was the shallow run. If I mark this low as my sell side liquidity is low, you will see that this low and that low, they are exactly the equal lows. Yeah, it went little lower of that, but either way, it's so simple to see that market has made the sell side liquidity around that area? Just tell me, isn't it so clear to see that market has made the sell side liquidity around London session? Absolutely. So when it has made the sell side liquidity, what should you look for? Buy. Now, are you going to go to your 1 minute chart and start to look for buy setup? No, you are not going to do that. First, you will wait for 2 a.m. New York local time for starting your kill zone. When the candle will appear around 2 a.m., you will start first to look for your hard time frame point of interest. So over here, I can see that this is the 15-minute bullish fair value. So I'm going to mark the 15-minute bullish fair value. Are you looking for sell? No, you are not looking for sell. If market is falling, you will wait. You will wait for the buy setup because you know market is going to go higher because it has made the sell side liquidity already. So now I'm going to 1 minute chart. Just keep that in your mind. That was your 15-minute bullish fair value. Okay. Now where the London session start? I mean the London kill zone. The London kill zone start around 2 a.m. So this is the London kill zone start, and the London kill zone is going to end around 5 a.m. So let me mark it. So this is the 5 a.m. This is the London kill zone. So you will start to look for your buy setup in this time frame. Now, when you are looking for buy, I will talk about this price action. Just keep a little time. When you will look for this buy, first you have to find out the liquidity from your 15-minute time frame. Now, if you see from 15-minute chart, it's very messy price action, and really you don't have any kind of buy side liquidity. You have the swing high. I told that I never look for the swing high or swing low for my liquidity. But in London session, the obvious swing high and obvious swing low is very important, because you know market is going to make the liquidity. Though it has made the sell side liquidity, it can just keep going higher to make the another buy side liquidity as well. So it can do that. I need to mark some kind of extreme liquidity so that I can frame my trade, and I'm not going to hold my trade until that extreme one. Instead of that, I can just close my trade in the 1 minute liquidity. Now, if you really know where is your 1 minute liquidity, and if you are not in rush, then you don't need to mark the 15 minute liquidity as your extreme liquidity, because either way you are not going to hold your trade until that liquidity. From 1 minute chart, I can see this high and that high. What is that? Relatively equal high. So I have this 1 minute buy side liquidity. Okay, 1 minute buy side liquidity. This is the London session started, and previously that was not my buy side liquidity. Look, until this high is not appeared over there, that was not my buy side liquidity. My buy side liquidity from 1 minute chart was over here. So that was clean buy side liquidity around that area. Okay. Before that high appeared over there. Now you are looking for buy. You have this higher time frame point of interest over there. That is the 50% bullish fair value gap from 15 minute chart. So it came to this bullish fair value gap, take all of this relatively equal lows. Then you got your market structure shift. Look, this market structure shift, absolutely valid market structure shift. Okay. So over there, when you got that market structure shift, I will explain all of this price action. Don't worry. Okay. Here, when you have got this market structure shift around that area, where is your entry fair value gap? Now here is your entry fair value gap. Let me mark the entry fair value gap. And below this entry fair value gap, you have very small, some kind of last fair value gap or something, or maybe this is your entry fair value gap. I don't know. Either way, you didn't get any entry opportunity over there. Okay. So maybe this is your entry fair value gap, but you can see that market, after making the fair value gap, market didn't tap over there. It keep going higher. Why it went higher like that? Because this setup is inside another setup over here. This is the real setup. Market went lower, take the liquidity, market structure shift, fair value gap. This is the anti fair value gap, or some kind of setup over there. Then market went higher. This setup created inside that setup. That's why most of the time I told that this is not going to trade that fair value gap. Instead of that, it will keep going higher, because over here the breaker block is important. Here the breaker block is going to create around that area. So that into was dependent on that breaker block. Now maybe you didn't see this setup and you don't need that information. Okay. Either way, you have just missed that trade, and it has taken that high. When this high has taken, look what it has done. It has made another relatively equal high. So you will remove this buy side liquidity and you will keep that buy side liquidity. Then you have seen that market is falling. Are you going to take the sell? No. Why? You know the concept. Market has already built the sell side liquidity, so it should keep going higher. So when it is going to fall again, you will be very happy to see that you are going to get another opportunity to take buy. When it fall dramatically over here, mark the last fair value gap from 1 minute chart. Just look it. Okay. I would love to mark the 1 minute last fair value gap from there. So here, it's a very small fair value gap. Very small. Okay, there is no fair value gap. I'm sorry. There is no fair value gap, but still you have this fair value gap. So mark this one as your last fair value gap around that area. Here, this is your last fair value gap. Price came here. Just 2 candles closed below this fair value gap. This is called fake breakout. Then market started to go high again. Make this swing high valid for shifting market structure. Then market went lower. Boom, market structure shift. There you got another market structure shift over there. Okay. So let me mark that another market structure shift. Now, are you going to believe this setup because it has created from 1 minute chart? No, you are not going to believe that setup because it has created 1 minute chart. Remember this 15 minute bullish fair value gap? Did the setup created above the constant crossment of that 15 minute bullish fair value gap, or this setup has created below the 15 minute fair value gap constant encroachment? Where it has created? Obviously, it has created above your 15 minute bullish fair value gap. So when you got this market structure shift, there is your fair value gap. Is that a clean entry fair value gap? Absolutely, brother. This is a clean entry fair value gap. This is your breakaway gap. Now I'm not going to mark this breakaway gap because market never reached over there. Okay. Is that immediate reaction after the market structure shift? The very next candle tap to this fair value gap. So you will take your entry over there around that area. Your stop loss is going to cover the breakaway gap. Where should be your target? This 1 minute liquidity around 1 minute chart, this is your liquidity. Now you can see market didn't take that liquidity yet, but I believe that market is going to take that liquidity. The risk to reward ratio 1:2.77, 30 handle. In London session, if you can manage just 10 to 20 handle, you have to be more than happy. You don't need to catch that 30 handle. In that type of situation, obviously you should take a partial around that area over there. You have to take a partial over here to the low of this parallel gap. Okay, so let me mark it over there. Okay, over here. Now you can see it's 14. Oh, boom, over there. Okay, see, it has taken that buy side liquidity. It's just a 14 handle, brother. I'm telling you the thing you should follow. If you think that no, you don't want to follow these things, it's up to you. But I'm telling you what you should do. You have to take the partial over there. If you are unable to, take the partial over here, you can just close your trade over there. Now, actually, I marked this one as my last parallel gap, but I can see there is a last parallel gap. The last parallel gap is over here actually. Okay, so I'm sorry for that. I am in rush. I have to go outside. So before going outside, I wanted to make this video so that it can be insightful for you. Okay, so until that area. Sorry. So here you have to take the partial to that last parallel gap. You have to take the partial. If you are unable to take the partial, you have to close your trade over there. If you have the opportunity to take the partial, then take the partial over there. Hold your trade until that 1 minute liquidity. Don't hold it until this 15-minute extreme high. Don't hold it until that area. If you have more than 2 contracts, then take a partial over here, take a partial over there, then put your stop loss too high, and let's see if it can take that high or if it can make that buy side liquidity around the learning session as well. So this is the concept for taking the buy. What you are looking for, let me summarize this video one more time. First, market fall made this sell side liquidity. When it has made this sell side liquidity, I will start to look for buy. For looking for buy, I need a higher time frame point of interest. Over here, I have this 15-minute bullish parallel gap. Look over here. This is the fake breakout. One candle close below this bullish parallel gap. The very next candle come back inside this parallel gap one more time. So this is the fake breakout. Okay, it was the fake breakout because market overzealous. It reached until this 1 minute last parallel gap. Now, when you got this bullish parallel gap, you will start to look for buy. That buy setup should be created above this parallel gap. If the buy setup created below this parallel gap, you are not going to take that buy. The concept is clear, brother. Sell side liquidity has made, market is going higher. If buy side liquidity has made around the London session, you will start to look for sell. Now you will go to your 1 minute chart, and when you will be in your 1 minute chart, you are waiting for a buy setup. Suddenly you have seen that market has made 1 minute buy side liquidity, then it is falling. When it is falling, are you going to participate in that fall? No, you are not going to participate in that fall. Is that valid to look for that sell setup? Absolutely, it's valid. You can see that market has taken some liquidity, that obvious buy side liquidity has taken over there. Then you got the market structure shift, a very nice market structure shift, fair value gap. Market trade that fair value gap, went higher again. What did it came? Order block. Look at this. This is your order block. Tap to this order block, fall again. Before falling, this is your propulsion block over there. Tap to this propulsion block, fall. Is that sell setup valid? Absolutely, it's valid, but you are not going to participate in that sell setup because you don't know how far it is going to fall. It can simply reverse from this bullish parallel gap. You didn't know that market is reaching until this 1 minute last parallel gap. It reached until this 1 minute last parallel gap when it started to go higher. Are you in rush because market is going to take that buy side liquid? No. Here you will wait for a market structure shift. If the setup happen or create below this bullish parallel gap from 15-minute chart, you are not going to take that entry. Instead of that, you are going to wait to look for the setup above this bullish parallel gap. Now here you had no market structure shift. Even if you had the market structure shift, you are not going to take that buy. Instead of that, you are going to wait for this market structure shift above this bullish parallel gap. Because if you can frame your trade above this bullish parallel gap and your stop loss is around that area, that means you are safe. Why? Because now market has to break the entry parallel gap, then 15-minute high, constant encroachment, low, then the breakaway gap. See how many PTRA or strong breakage is over there to stop you out. It is more confirmed entry. I could simply put my stop loss over there. In that type of situation, my risk to reward ratio would be 1:2.68. I would love to say that you should cover the breakaway gap at least. Okay, so here this is the breakaway gap. You should cover the breakaway gap, and if you'd love to hold your trade until this 1 minute buy sell liquidity, not the extreme buy sell liquidity from 15 minute chart, 1 minute liquidity, then you have to take a partial to that last parallel gap from 1 minute chart. Risk to reward ratio 1:3.3. If you cover it until that area, 1:4.5. So this is the London session trade, and this is the concept that is going to help you to identify perfect setup around the London session. Nobody is going to tell you this. I promise you, brother. I am challenging you. No simple person is going to give you this information. Just backtest it. Don't believe me. Go back to your chart and backtest it. If it works, use it. If it doesn't work, throw it to the dustbin. I'm proving you my point every single day. So make sure that you understand this concept perfectly, and you have given me the thumbs up. You have subscribed to my channel if you are new. So until the next video, cheers.